here with Nick Beecroft, the chairman of Saxo Capital Markets UK and senior markets analyst for Saxo Bank. Firstly, Nick, thanks very much for sparing your valuable time on a very busy afternoon. We've just had the US non-farm payroll release, which came in broadly as expected, would you say?
Well, it did. It was it was curate's egg in that sense. It was mixed. So the non-farms were slightly higher than expected, but the unemployment rate edged up again.
Yeah.
So something for everybody probably.
And when the adjustment is made, I mean, will it still look quite so rosy? I
think you have to look in great detail at the breakdown of the unemployment rate, because it always depends on the change in the participation rate. But I think that the market tends to focus more on the non-farm payroll number, which is undoubtedly quite strong.
Yes.
Hence we've seen the dollar strengthen as a result of that.
Indeed. And this has been a momentous week from a news point of view. We've just had the Hurricane Sandy wreaking havoc. Do you see that as really a significant event in the overall scheme of things, heading into an election in which the non-farms clearly weigh upon voter sentiment, but does it, along with the hurricane, does it weigh on sort of investor sentiment as well?
Well, I don't think the hurricane would have any real long-term effect on investor sentiment. In developed economies, it's come to be shown that these no doubt dreadful events from a human perspective in fact have very little effect on the economy over let's say a couple of quarters. If you look at the Japanese earthquake and tsunami, in developed economies you get a slowdown to begin with because of the obvious disruption to distribution and to the economy generally, but then you get a build-up of construction spending, let's say, to repair that. It's very different for emerging market economies, where there tends to be a hit to economic growth and then not the same rebound. But anyway, in this case, no, I think that's going to be a wash. We will have forgotten the financial effects within several weeks. And I think the other big effect it could have had was possibly upon the election results. I think it's difficult to say that that's come down one way or the other. Obama got back to doing his job of being chief executive, so to speak, and that's fair enough, and I think he did that competently. So I think he probably avoided a minefield there, or a landmine rather. He could have messed that up, as I think in retrospect it seemed that George W. Bush did over Katrina. There was a lack of urgency, wasn't there, in that, and seemed to damage him politically. I don't think so. Obama has avoided standing on landmine, and I think Romney said the right things. I think once again it's a bit of a wash, but I think there are potentially quite momentous implications over who wins this time. That's undoubtedly the case.
And how do you see that playing out with regard to the US dollar? I mean, there is a danger that there'll be a knee-jerk reaction, whoever ends up with the keys to the White House. Do you see that as something that would extend into the rest of the year?
Yeah, I do. I think this is also quite binary. If Obama wins, then I think that's a bit of a wash. Assuming that the House stays Republican and the Senate stays Democrat, the latter is in some question. But even if the Senate turned Republican, with Obama in power, the important thing for the markets is that Bernanke would also probably still be in position for an extended term, or somebody similar to Bernanke. But the big thing is, therefore, that Romney has expressed concern over the Fed policies, and there's a very good chance that he replaces Bernanke at the end of his term.
You said some things to that effect.
Exactly, So that's what's going to move the markets, and I think that could start pretty much on day one if Romney were to win.
And we hear a lot about the fiscal cliff as well, which there's a lot of division over really how precipitous that is. If Obama stays in power, or even if he doesn't, what happens with regard to Fed policy, the fiscal cliff, and how they really do they keep pushing the problem forward, bearing in mind that there's a Senate to stay on board, or keep on board as well?
I think if Obama wins, then, as I say, Fed policy will remain pretty much unchanged. Not much implication there. In the case of what will undoubtedly, I think, be still a Republican House, you do have a difficult negotiation ahead. There's no question about it, and we'll probably get close to the cliff. The cliff will look larger, and that may worry, in the short term, equity markets. and maybe lead to dollar strength as a safe haven.
Yes.
But I think that'll be a wash as well. Turkeys don't vote for Christmas. This will be sorted out, I think, by, let's say, the middle to the end of January. And there are other scenarios. Let's say Obama gets a clean sweep. Let's say Romney gets a clean sweep, meaning presidency, the House, and also Senate. Then I think the problem, to say it disappears is too much to say, but he can then essentially do what he wants. And I think we will have pretty swift resolution and not what the markets hate, being uncertainty. And I think that's once again probably a recipe for a stronger dollar.
And then turning away perhaps from the States, where a lot of people are saying comparatively, although it's a very significant election, matters continental European really where the focus should be, and the Greek scenario, which is looking yet again very much on a knife edge, with the possibility of political splintering.
Yeah, sure.
Where do you see that going? You know,
it's going to be
Brexit rearing its head again.
The 11th of November vote in the Greek Parliament is going to be vital now, and as you suggest, there are signs of the coalition, if you like, splintering the coalition required to pass same. I think it'll come down to the wire, but I think the measures will be passed probably. We're now into a very much longer game, I think, with regard both to Greece and the wider question of essentially Spain is the big one. You know, the ECB has provided this breathing space again. I think Greece will just get over this hurdle on the 11th of November. There'll be some fudge, meaning that the Troika will eventually authorise payout to Greece. But yet again, we've seen the estimates of Greek debt to GDP hiked up by 10% within a month, a change within a month of prognosis. So some stage next year, I think Greece will come to crisis again, and the Eurozone will have to bite the bullet as to whether to take write-downs on publicly owned debt, because the ECB and Eurozone, EU, own a lot of this debt now as well, so that the governments would have to take a hit or to let Greece go. And I think their judgment may in the end be the quid pro quo for continuing German support for the wider Eurozone, that Greece is let go, so to speak. And then the wider question of Spain, you know, as the summer heats up next year, maybe that'll be the crescendo time for public fatigue with these austerity programs. You know, I think it may sound a trivialisation, but I think it's certainly the case that the politicians will be pleased that it's getting pretty cold to demonstrate on the streets. I don't mean to trivialise the huge nature of what's going on, but it's certainly the case. You're more likely to see social unrest, because by then we'll have had 6 more months of awful austerity, potential deflation in many parts of Europe, and is there a question of a popular revolt? We do know there's enormous political will to try and make the thing work, but that's going to put to a severe test, I think, in about 6 months' time, let's say.
And moving closer to home with the sterling, do you see that broadly staying where it is as the year-end approaches?
Yeah, I think so. I don't see euro sterling moving a great deal before year-end, and we've talked about the possible implications for the dollar. I read today, first time, suggestion in the popular press, serious financial newspaper, that maybe a sterling devaluation is the way out of current problems. And that could be an argument that gathers momentum, I think. We have that benefit of not being in the euro. We can do that. We've tried monetary policy. There's no desire to change fiscal policy. So one lever left to pull is an active attempt to devalue sterling. So we could see that.
Interesting. And finally, Nick, what do you see? What are the bigger movements? Is it in dollar yen, or is that still a long game?
I think that's probably still a long game. It's caught between the countervailing forces of safe haven, seeking safe havens, the BOJ being quite aggressive in terms of money printing and trying to weaken. Whenever we get down to 78, certainly below 78, I think those voices will become very much stronger for more and more aggressive money printing. And it's a bit of a sideshow, but down the road, keep an eye on it, because Japanese debt to GDP is just going to continue to explode over 200%. It is over 220% already. It'll get worse and worse. So that's a story for probably 2014 or 15, I suspect.
Yes, no doubt we'll revisit that the next time we meet up.
Okay.
Nick Beecroft, thank you very much indeed.
You're very welcome.